And then within current assets, we've got the bank accounts. So that's going to be the first one here, bank accounts. They need their own subcategory, not for reporting purpose needs typically, because you would normally just report them under other current asset or cash and cash equivalents, but because they can connect to the bank feeds. So you can see this little indication says that they can connect to the bank feeds. Then you have accounts receivable has its own little subcategory. And that's weird for reporting purposes, but it makes sense from an internal workings purpose because the accounts receivable are going to need a subledger of tracking the receivables by who owes you the money, by customer. That means it's going to have not only be in other or current assets like it would on a normal financial statement, but have its own category of accounts receivable so QuickBooks can assign that special functionality. All other current assets are going to be labeled other current asset, which is the default asset account if they're not having a special need in their current assets. Then we have the property, plant, and equipment, which QuickBooks called fixed asset type of accounts, which you can see here. And that's going to be the things that are going to be, you might call them depreciable assets, which will have a subledger. But oftentimes in the United States, that subledger will be maintained in tax software because we have to track the subledger for income taxes using income tax laws anyways. And therefore, if we have to track them for internal bookkeeping purposes, it would be nice if we can use the same software for both of those two things. So we'll talk more about that later.